Okay, so this morning I will make a small update, lesson 2, I would say, about the indicators. We already did and had a lesson that was the first one I did showing those indicators. Those one are telling us where we should pay attention and where we can get movement on the price. Just to refresh, orange are short term, green medium term, and black long term. That's how it works. So when we use them, in many cases we don't use a lot the short term. That makes a cleaner chart, and that's give us something nicer, easier to read. And if we look here, we see how those levels have been playing very nicely. Now, the idea is we have a system that is defining levels of interest, but we needed a system that was telling us, yes, price is ready, price is exhausted, and price can pull back or bounce. For that, we are using 4 indicators. This one, I will come to this one later. The last one here is the same as this one on many time frame in one view, so it's a multi-time frame. So what do we use? We use 2 stochastics, this one which is called the RSIX and this one which is a PRICE. So those indicators are the one we are using. And on the stochastics, we have 2 configurations, 532 and 1433. They are regular stochastics of TradingView. Nothing magical there. So how do we use them? So we use them, as I said, to know how is the price. In the short-term time frame, when we have a signal, and when we have a level just on the price or not far from the price, like let's say here, we had this big black level that gives an area of response on the price, and then the price went to this green one. We had a red signal, we have overbought condition on both stochastics, and this one above the mid-range, so it was a possibility to get short. Here we had a short signal. Another example would be when we have the 2 signal of that one. For example, here we have a signal on the PRICE, we have a signal on the RSI, we have the stochastics, both of them are ready. From the time point of view, this is the end of the day, just before the fix, so it's not a moment of the day when we take trades, but the setup is a nice setup. So we see the signal came back a little bit later. We were still on this black level, still in oversold condition, and we had a back test of this channel here. When we have a signal and the back test of the channel with a signal and a condition, a setup ready, then we can take a long. We are right on the level, so we could take a very small stop loss. Let's say put the stop loss 10 pips or something like that, or if you wish, you can put it just under the other double level here, because when the price will come in this one, for sure it will bounce. So you take the trade and up we go. So what we look is a place. Ideally, the perfect, very perfect trade is when we are inside the London session. We try to avoid the New York Open, so we start from 1 hour or 2 hours before London Open up to the New York Open. And then after New York Open, we start to be more careful because we have some moves coming, but we still trade them. So here we see, for example, this signal on the 15 minute. We had a signal, but we had nothing. We have a long signal, but we didn't have a support, something to trade from. So let's see if on the short term, and in this case, we can use the short term to make sure we have a short-term support, and that's what we had there. In that case, the short term is very interesting to use. You have a small 15 pips trade, which is not bad because you know the price will probably stop on the next level and breeze from there. We don't know yet in which direction, but that's a very common trade we take. All the signals, all the setup is complete on the price 6, RS6 and both stochastics. We have a support with our short-term level and we bounce from it. In those cases, we can take a 4-5 pips stop loss and it's more than enough. You see it here, even 5 pips is more than enough. But that's a personal decision. As I said, I don't give stop losses rules because that's according to everybody money management rules, and that's very personal, so I won't go in that. Then what we do is we use in the morning, that's how we start in the morning, we use those setups to look how is the instrument. I mean, is it exhausted on all the time frame in the same direction, or do we have some divergent signals? So let's take the example of the euro dollar today. So if we look at the euro dollar today, we start from the daily chart. And what we see we are overbought. We had some signal already for a certain time, short signals, and we have signals here. So we are clearly in a place where we will pull back, and that we did. We played all the short in this area. We see the price still goes up, but we know we are not far from that. Then we go and we look at the 4 hours. How is the 4 hours? At the time we speak, it's perfectly overbought here too, and we had a sign. That's a great setup because we already have 2 big time frame showing the same direction. We took a short trade earlier in the morning. When we took this trade, the 1 hour was aligned with the 4 hour and the daily. So it was confirmed on 3 time frame. And then if we go to the 15 minutes, what we had in the morning when we took this trade, it was a little bit after this signal. That signal was 5 o'clock in the morning. We took this trade in that area with a double top after we get a complete setup. We had a complete setup, we had a double top here, we took the trade, and now we have banked already some money on that trade. But that's a way to make sure what is the direction we want to trade. Of course, we trade both sides, short and long. We don't mind about making money on any side, it's okay. Like here, we had a signal, but it was at 5 o'clock on the close, so we would not have taken this trade. Let me find another example of a long trade we would have taken. Let's take this one here, 7 o'clock in the morning, so just before the London Open. We were okay. We had a support here, so we would have taken this trade. It's the same we already saw a little bit earlier. If we look here, big black level, we overshoot a little the level to this next short-term support or resistances. What did we had? We had a signal here. We were in oversold condition a little bit before. We had a signal here. We nearly, and I'm sure that on the moment we retested the channel, so we had a confirmation to take this trade long. And this one was a little bit more interesting because it was going more far away. So what we do, what I do, and then everybody do what he wants, but what I do generally, when I think I am on the right side, I bank up to 2/3 of the trade and I let run 1/3. So if it goes up 100 pips or something like that, like here, well, it runs and that's not a problem. Now I am, in this case, I am bearish because I think we will get a reversal, at least temporary, but that's what we think. So I play the shorts as much as I can, and I go a little bit heavier because we have seen we already had some nice reactions. Here we see very, very small candle, but here you saw 1, 2, 3 candle did the same than here, like probably 6 or 7 or 8. So momentum tends to accelerate here, so that's why I try to trade more, a little bit bigger size on the short side, actually, because of what we saw, which was a daily, the 4 hours and the 1 hour earlier, but we have clearly a 1 hour is not bullish now, is bearish. So we have the condition that tells us we will see a pullback, and not only a few pips. Here we will see a nicer and bigger pullback. So that's what we use. What I do is I take off the D signal because it's not something we use. You can use it, you can find a way to use the crosses, but this way we have a cleaner situation. We already have enough indicators on our charts, so it's better to take off some of them, and that's how we do.